Okay. I will start going through what is on our screen. Please read with me. Don't be left behind now.
Okay.
Please go with me. Okay. I will read, but I also want you to focus on what I'm reading now.
Yeah.
Okay, so what they're saying here, they're saying the following information was extracted from the accounting records of Saldanha Limited. So this is the company Saldanha Limited. It is the company that we're going to work on today, right? And they're saying here, Saldanha Limited is authorized to sell 2.8 million ordinary shares. When we're saying we are authorized to sell 2,800,000 ordinary shares, we mean that we are not allowed to sell beyond that, right? Once we sell 2.8 million, once you issue 2.8 million, you need to stop. You are not allowed to sell more than that. The memorandum of incorporation does not allow you as a director, because who is issuing the shares? Those are the directors of the company. So when they issue the shares, they need to stop at 2.8 million. But there is an exception from the Companies Act that allows directors to issue more than 2.8 million, but that is something that you don't have to worry about it for now. What you need to know as a grade 12 student is that you only have to sell up to a maximum of 2.8 million. You don't have to go beyond that. Required. Prepare the income statement for the year ended 30 June 2014. So our financial year now is ending 30 June 2014. So when is it starting?
The 1st of July.
Yes, July, which year?
2013.
Yes, very good. Very good. If it starts 30 June 2014, if it ends 30 June 2014, which means it begins 1 July 2013 years. So this is our 12-month period. Okay, let's go back. Prepare the balance sheet at 30 June 2014. So we're still going to look at balance sheet more as we carry on, but for now, the focus is on the income statement more. Prepare notes to the financial statements for the year ended 30 June 2014. Read the following extract and answer the questions which will follow. There will always be a theory question in the exam, so we also need to touch on those questions that will have a theory question. But probably this is the last question I'm doing with you as an example. Next, maybe when we will be doing once we're done with this one, we will be doing an exam question, right? We'll be doing an exam question. You are a shareholder of Saldanha Limited. You have received some confidential information from one of the senior employees that there is a gross mismanagement of finances by one of the directors, right? So there's a problem here in this company. There is a problem in this company. You are a shareholder. You receive a
Yeah.
notification from one of your senior employees to say, yes?
I didn't hear you for a second. I think it cuts a bit, but it's fine now.
Oh, you can hear me now, no?
Yeah.
Okay, sorry about that. Okay, I will start the sentence again. You are a shareholder of Saldanha Limited. You have received some confidential information from one of the senior employees that there is gross mismanagement of finances by one of the directors in a company. So in this company, there's a problem, Kinelwe. There's a mismanagement of finances, mismanagement of funds, which means directors are misusing the company's money. You as a shareholder, you got that information from one of your senior employees. That is something that should concern you as a shareholder. Okay. Then they're saying here, it is alleged that he has booked numerous air tickets to holiday destinations and has used funds of the company to pay for these trips. You see the problem here?
Mm.
What is happening?
He's using the company's funds and he's not allowed to do that for personal use.
Very good. Yes. The director is not allowed to use company's money for personal use. Director is allowed to use, they allowed to use their salaries, the director's fees only, but they're not allowed to take company's money and do their personal stuff. So this one is taking the company's money, book flight tickets and for holidays and all of that, which is not right. On looking at the company's previous financial statements, you find an item of expense indicated as marketing expenses, which means you are investigating now as a shareholder. On investigation, all expenses of directors, including F-Light, are included as marketing expenses. You see what is happening here? This director, which means is trying to hide all these personal expenses, is they hiding them on the marketing expenses as a line item in the income statement, which is something that is not allowed. In terms of accounting, you're not allowed to mix the expenses. All the expenses that are material, they need to be recorded separately. That's materiality.
Mm.
So there is a question here that says, what principle of GAAP has been compromised here? According to you, what can you say about this one? Which GAAP principle can you say is compromised by the director?
Business entity.
Yes, why are you saying business entity?
Because they're using the company's funds for themselves and they're not allowed to do that.
Yes, they're not allowed to do that, right? They're not allowed to do that, which is correct. But what is the biggest problem here? What is the biggest problem? There's something here that is wrong. Business entity, it's a right GAAP principle, obviously, to quote. Yes, I agree with you, but it's not because they're not allowed to use company's money for personal stuff. No, there is a reason why we need to select business principle, business entity. What is the main reason? And we can say the GAAP principle is compromised here. Does GAAP principle does it say that they're not allowed to use company's money? What does business entity says exactly?
Owners should not use the money of the company, and they should keep the business's money and their money separate.
Please come again, Kenela.
Owners should keep their finances separate from the company's finances.
Yes, it specifically talk about what the accounting. Yes, it says that the business or the finances, it should be kept separate from personal affairs of its owner, right? It is specifically talking about what? The records, right? The accounting records should be kept separately. That of a business and that of the owner. So which means now, but what they did here, what these directors, although they were wrong, we understand that they are wrong for using company's money. But the biggest mistake they did, the big wrong they did here is that they are hiding those expenses as what? As marketing expense, which means now they are recording their personal expenses into the business accounting records. You see the problem?
Mm.
Yes. It is wrong to use company's money for personal affairs. We understand that. But when you record it as part of the business expense, that is totally wrong. That is against the business entity concept.
Mm.
maybe, for example, if they had recorded it and indicated that maybe this was director's what director took money and used it for personal expenses, or maybe they should have had something like this on the income statement. Instead of recording it as part of marketing, they should have had something like director's personal expense, for example. Which means now by doing this, prudence, no, not prudence, sorry, the business entity concept is no longer affected because they disclosed it separately. They disclosed it separately, and it was indicated by what? It was indicated that directors, they used that money for their personal expenses, but hiding it under marketing expense is wrong, because that's what they did here. They said, on looking at the company's previous financial statements, you find an item of expense indicated as marketing. On investigation, all expenses of directors, including F-Light, are included as marketing expenses. That is wrong. It is against the business entity concept. They should have recorded it separately and said, for example, drawings, because this thing is like drawings, as the concept is saying. But for a sole trader does take money and use it for personal expenses, and it, but they record it as what? As drawings, ne? But now, when it is a company, which is a public company like this one, P2I Ltd or Ltd, there should be something like what? Loan to director. You see what's happening here? You see what's happening here? The director has took money from the business for personal use, which means it is like the director is borrowing money from the company. This should be recorded as what? As loan to director, right?
Yeah.
Instead, this should be recorded as loan to director, not as marketing expense. No. Not as marketing expense, but it should be a loan to director. Okay. So that is the gap, but you're correct by saying the reason why I wanted us to discuss, so that we get an insight or maybe get a more understanding with what is wrong here. But the business entity concept that you quoted is correct. Hello guys, Pinelo, can you please welcome Smanga? I'm sorry about that. I think the network kicked me out. Hi Smanga, welcome. I'm going to work with you and Kinilo from the question that we're going to do today, but we'll discuss more. I'll discuss more separately with you, but at the moment, can we just focus on the class that we're having and finish our session? Can you please confirm, Smanga, if you can see the screen on your side?
Yes, I can see the screen.
Okay, thank you. So we're working on this example that we're working on. I've already started with Kinelo because you were a little bit late, but that's not a problem. We actually discussing this question. We're discussing a scenario here where a director was using company's funds for personal use, which is not allowed. But also the biggest problem is that the director, on top of that, they recorded those expenses under marketing expense, of which they were hiding those expenses, which is also incorrect, or it is not right for a director to record personal expenses as part of company's expenses, which is wrong. So that's what I was discussing. That's what I was discussing with Kinelo now. But we just at the beginning of the question, we're going to do the income statement just to take you through. Right now, we're going to discuss 4.2. Yes, we're going to look at 4.2 right now, but I just want to read the scenario first so that maybe you are with us from what we're doing. So what is happening here? The scenario is saying, or we're doing number 4 actually. They said, read the following extract and answer the question which follows, right? They're saying here, you are a director, you're a shareholder of Saldanha Limited. You have received some confidential information from one of the senior employees that there is gross mismanagement of finances by one of directors. So this is a problem that we're facing in this company, that one of the directors is mismanaging the funds of the company, mismanaging the finances of the company. Then they saying here, it is alleged that he has booked numerous air tickets to holiday destinations and has used funds of the company to pay for these trips. You see now the problem here. The director is using company's funds to buy air tickets or to book air ticket to holiday destinations, which is not wrong, which is a director can use company's money. That's not a problem, but they need to disclose that. Right? They need to disclose that so the shareholders are aware of that. But the problem here is that these directors, they're not disclosing that. On looking at the company's previous financial statements, you find an item of expense indicated as what? As marketing expenses. On investigation, all expenses of directors, including F-Light, are included as marketing expenses. So this was the scenario in front of us. And the first question here was asking what principle of GAAP has been compromised. So according to you, Smanga, what can you say here in terms of the GAAP principle? Have you done GAAP principle at your school?
Yes, we have, but like the last time we did GAAP was last year, like term 3. I don't think I remember the GAAP principles.
Okay. That's not a problem, but you still remember a GAAP principle called business entity concept or business entity?
Yes, I do. Yes.
You forgot, what does it say?
Yeah, I forgot.
No problem. You're here to learn. So that business entity, what it actually says, it says that the business entity concept, it actually provides that the company, that the accounting for business or organizations, it has to be kept separate from the personal affairs of its owner. So it talks about accounting here to say if the owner of the company uses company's money, those things, they have to be shown in the company's books, right? Also, as the owner of the company, if you're using your personal cash that belongs to you, you must not come and record it in the company's books, right? So here, what happens here? The director is using company's money, right? But also that money is recorded in the company's financial statements, which is not wrong because that is company's money, right? It has to be recorded there. It's not his own money. No, it is the company's money and it is recorded in the company's books. That's correct. But the problem here, it says on investigation, all expenses of directors, including air flights are included as marketing expenses, now that's a problem. To say, as a director, you're recording those expenses as what? As marketing expenses. It is now shown as if it was the company's expense, whereas instead, this is an expense of a director, which should be recorded separate from the accounting books, or it has to be shown from the accounting books to say, these are the expenses incurred by the director for personal use, not just as a marketing expenses, as if like, they were like marketing cost, or they were doing marketing for the business and then they have to record it as that. No, that is wrong. So the business entity concept is affected here according to this scenario. But we'll discuss these business concepts so that you can also remember what they said. It's something that we've discussed already in the previous sessions. You are not part of us, but that should not be a problem. 4.2. Expenses incurred by directors have been treated as legitimate business cost. Let me repeat this one. Expenses incurred by directors have been treated as legitimate business cost. As a shareholder of the company, what is your reaction and how will you attend to this discrepancy? What can you do as a director? It's something that we've already discussed here to say, as a director, right? This is the expense that was incurred by the director. But now this expense is being treated as a business expense or as a business cost. That is not correct. That is not correct. You cannot use the company's money for your own use or for personal expense, and then you record that money as what? As a business expense, which means now our marketing expenses, they will be overstated. So in the income statement, I need to have what? As part of the expenses, I'm going to have what? Marketing expenses. I'm going to have what? Marketing expenses. But these marketing expenses, they include what? They include directors' personal expense, which is not correct. These directors' personal expenses, they should be recorded separately as what? As directors' personal expenses. They should not be included as part of what? They should not be included as part of business expense. But on top of that, I want you guys to understand something. When a director goes on a holiday, that has nothing to do with the company. That is something personal to a director. So we cannot record that as a director's expense. No. The company did not incur any expense. That expense is not for the company. It is for what? It is for a director. So which means now a director took our money as a company and used it for personal use, which is not correct, we don't have a problem for that as a company. But how you record it is a problem. Here, recording it as part of marketing expense is a problem. Instead, this should go to a balance sheet, because the director is owing us that money as a company. You took our money and used it on your own for your own personal use. You must bring it back. The director is owing us money. So that money becomes what? Becomes a receivable. Trade and other receivables. It becomes what? A receivable from us, which means the director is owing us money. The director is liable to pay that money back to us, which means that becomes what? It becomes a receivable. So, and now it has to go to balance sheet as part of what? We have current assets there, we have non-current assets, we have current assets under the balance sheet. And then what do we need to have here? We need to have what we call loan to director. All the monies that a director took, all the monies that a director took and used for personal expenses, the director must pay back that money. Otherwise, we're going to deduct the money from director's salary. So that's how this thing should be recorded. instead of recording it as part of marketing expense, it should go down to where? To a balance sheet as well, as loan to a director. That's the accounting treatment here. When it says here, expenses incurred by directors, you see, these expenses incurred by a director have been treated as legitimate business costs, which is not correct. That's not right. As a shareholder of the company, what is your reaction and how will you attend to this discrepancy? Whatever director's expenses that are included as part of marketing expenses, they should be reallocated to current assets as loan to a director. But also on top of that, we need to take some action against this director. As a shareholder, I have a right to fire this director because that's not right. Misusing the company's funds, I can fire the director or I can fine the director. I can suspend a director because what they did is not right. What they did is not right. It is definitely against the company's policies. So this is just a part of a theory question, things that we may expect from the exam, but we're not there. What I want us to talk about more is the income statement. So what we're going to do here, guys, is we're going to prepare the income statement. Any question from this theory paragraph? Are you okay with it, Kinelo?
Yes.
You have no questions now? Smell on your side?
I'm still reading the statement and I'll try to attempt it.
No. You don't have to attempt the same. I'm talking about this scenario only.
Like the whole income statement.
What do you mean you're reading the whole income statement?
No, I was reading this
Paragraph,
statement,
né?
and I was gonna try to attempt whatever that is.
Okay. No, it's okay. That's not a problem. I'm going to do the income statement with you guys. If you're talking about this paragraph, it's fine, but you can also read it when you have time. I'll share the question with you guys. You can also consider this, read the whole paragraph, and then think about it and see what when on your side, what will be your, how are you going to discuss it in terms of responding to 4.1 and 4.2? But I'm not there, guys. I want us to do the income statement for the year ended 30 June 2014. That's what I want us to focus on for now. I want us to go through the information that is provided in front of us for us to be able to do what? To do the income statement. Okay, so they gave us a pre-adjustment trial balance here as at 30 June 2014, which is our financial year end. We have a balance sheet account sections that are provided to us. Ordinary share capital, 1,410,000 rands. Retained income on the 31st of March 2014, 1,342,230. Mortgage loan, Delight Bank, 333,500. Land and buildings, 2,048,500 rands. Vehicles, 407,000. Equipment, 308,000 rands. Accumulated depreciation at the beginning of the year. This is 1 July 2013, which is the beginning of our current financial year, because our year is ending 30 June 2014, which means it starts on 1 July 2013. 147,400, 170,500 rands is what accumulated depreciation on equipment. Then we have fixed deposit. Westwood Bank, 247,500 rands. We have a trading stock of 477,500 rands. And we have consumable stores on hand, which is a packing material at the beginning of the year, 7,500 rands. We have bank, 217,450. Petty cash, debtors control, creditors control, SARS income tax, provision for bad debt, 1 July 2013, 9,000. And then we have nominal account sections. Mostly on the income statement, obviously, we deal with more with the nominal account sections. The first thing we have here is sales, 5,250,000. Obviously, that we need something that we need to take to our income statement. Whenever we're doing the income statement, we start putting amounts on the bracket for workings purpose. 5,250,000. That's the sales that we have here. Before you go and deal with your additional information or the adjustments that have been provided to you. Next, we have cost of sales, which is 3,743,500 rands. It's something that we're going to record here. 3,743,500. Okay. And then what else we're going to have? Debtors allowances. What did we say about debtors allowances? Where do we record them? Separately, or they part of sales? What did we say about it, Kinelo?
We minus it from my sales.
Exactly. Yes, we have to subtract these ones from sales. Why are we doing that? Why are we subtracting from sales?
It is the discount that they get, so we have to minus it from the sales.
Not really a discount, but debtors allowances, usually that is, yes, well, it's a refund actually. It's a refund because when they return goods, that's when the customers are returning goods because they're not happy with those goods or the goods are damaged or whatsoever, and we have to refund them their money. So it's a sales return, something like that. It's not really a discount. When it's a discount, it's going to be a discount allowed, not really a debtor's allowances. Are you with me on that? Understand it now? You get it, Manga?
Yes, I do. I thought it didn't think it was mute.
Oh, no problem, no problem. Cost of sales, let's carry on. So which means now these debtors allowances will be subtracted from sales. That's correct. And then we're going to rent income, 88,440. So that is going to be under other operating income. And then what else am I going to have? Interest on fixed deposit. That is interest income, 12,430. It goes down there on the interest income. I'm going to have what here? 12,430. And then from 12,430, I have bad debts recovered, 1,150. So I'll go there and put that as what? As my income. Bad debt recovered, 1,450. And then from there, oh, sorry. Yes, 1,150. It's going to be 1,150. And then next, I'm going to have what? Director's fees, which is 20,000. So where am I going to record that? I'm going to have director's fees. That is going to be 420,000 rands. And then audit fees, 36,900 rands. Where am I going to record that? 36,000. The reason why we're doing this is because obviously we're still going to work on the adjustments. Salaries and wages, 330,000 rands. Where is my salaries and wages? 330,000 rands. And then packing materials, we have 11,550. That is packing materials, 11,550. And then marketing expense is 240,000 rands. Marketing expenses, 240,000. Okay, we don't have marketing expenses here. I'll just put it here. marketing expenses. So if they tell us about anything of a director's holiday that is included here, we will have to take it out because that's not going to be a marketing expense. So this is 240,000 rands. And then sundry expenses, 31,000 rands. That has to be recorded. Sundry expenses, we have 31,000 rands. And then what else? Bad debt, 6,000. I'm having my bad debts here. 6,000. Oh, what am I doing now? Bad debt is going to be 6,000 rands. And then dividends on ordinary shares. These ones we do not record in the income statement. So they'll go to the balance sheet. So we have all nominal account sections recorded in our income statement now. So what we need to do, we need to go to our additional information and deal with additional information that is provided in front of us. Okay, additional information and adjustments. So what they're saying here, they're saying a physical stock taking on 30 June 2014 revealed the following stocks on hand. The first one is trading stock, 451,075, and then the other one is the packing material. Okay, let's start with the first one. And then they're saying here, note, the accountant forgot to reverse the consumable stores on hand on 1 July 2013. Okay, so let's start with the first one, trading stock. What do we do with it? Smanga, on your side, I'll allocate this one to you. Trading stock, how do we deal with it?
What I did was I added it.
From where?
I don't in the income statement.
Why are you doing that?
I have no idea.
Okay, no problem. You see, we don't do things when you have no idea of what you're doing. I always want you to know what you're doing. At least you must have a reason. If you tell me something, at least you must have a reason that this is why I'm doing it. Okay, but I'll explain this one. You see the trading stock that that we have here. Look at the transaction. They're saying here a physical stock taking, which means at the end of the year. What is a physical stock taking? Which means that's when we're counting the inventory. That's when we're counting the trading stock physically at the end of the year, which is 30 June 2014, revealed the following stock on hand. So which means now, when we were counting inventory at the end of the year, or when we were counting the trading stock at the end of the year, counting it physically with our hands, we found that trading stock closing balance is 451,075 rands. That's what we identified, or that's what we found from our inventory count, right? This trading stock, you must go to your trial balance and check how much is the trading stock that is recorded there from our accounting record. And if you look here, our trading stock is 477,500 rands, right? Which means that this one is coming from our accounting records, which means based on my accounting records, the capturing and everything that I've been doing, my closing stock is supposed to be 477,500 from the accounting records. But what I actually calculated is 451, which is less than what is recorded by my books. Then what does that mean? It means that I may have lost some inventory or some trading stock during the year, maybe due to the stock was damaged. That's a possible reason, or the stock was stolen. That's another reason, or the stock was returned back and maybe was not recorded. That there could be another reason. So there may be a lot of reasons why we're having less stock when we're actually calculating it, but most likely we assume that the stock was lost, or it was stolen, or it was damaged. And because of that, we need to record what? And trading stock deficit, or we can also call it an inventory loss, but we usually call this one a trading stock deficit, which is 477,500 minus 451,075 rands. And then how much are we going to get as our trading stock deficit? Do I have a trading stock deficit here? Yes, so which means I'm going to have the amount that is sitting here, 477,500. I'm going to have what? 477 500 and then minus what? Minus the stock that we actually counted, which is 451,075. 451,075. So how much are we getting here? If we punch our calculator, how much are we getting? Come on, guys, how much are we getting here?
I got 26,000.
26,425.
Yes, 26,425. Okay. So that will be our trading stock deficit. You can see here, our books, we have recorded 477,500, which means by doing that, we're saying this is the stock we have. But when we go and count, you find out that you only have 451, which is less than what you recorded, which means somewhere, somehow, you have lost some stock. So you have to record it as what? As trading stock deficit in your books. Okay. Kinelwe, what about the packing materials of 2,130? They're saying here, note, the accountants forgot to reverse the consumable stores on hand on 1 July 2013. If you look here, we have a packing materials that we have of 11,550. And then here we have 2,130 as what is my packing materials. But also, if you go to on the balance sheet account section, they're telling us about what? Consumable stores on hand, packing materials 1 July 2013, 7,500 rands. What can you say about this one?
You're going to add the one
Yes.
that the accountant forgot to add.
Yes. Okay. And then?
You're going to add the one for this year and subtract the amounts that you didn't use.
Exactly. That's very good. Yes. We're going to say consumable stores on hand as an opening balance, 7,500 rands, right? Because this thing should also be done as what? As a T account. That is going to help you to understand this, right? Very easily. But what you're saying, you're 100% correct on that. What you're actually saying here as my trading stock, I'm just going to say here, packing materials, right? Packing materials, that is also an asset, like the normal trading stock. So what I will do here, what you're saying is that you're going to have what? Opening balance on our debit side. So that is going to be my balance brought down. Am I right on that? Which is going to be the 7,500. That's what you said from which is this 7,500, and then you said I'm going to add how much? 11,500, ne?
Yeah.
Exactly, which means these are going to be what? Purchases that I'm going to have here, and then that is going to be my 11,500. Okay, and then from this 11,500, and I subtract 2,130. Am I right on that? Which is going to be my balance. My balance carried down this one, 2,130. And then how much am I going to get as my how much am I going to get as the inventory that was used?
16,920.
16,920, right?
Yeah.
Exactly. So here I'm going to have 16,920. So that is going to be what? Packing materials used. So that's what I'm going to do. That's the same workings that I'm going to have here under my packing materials. So I'll say 11,500, and then I say plus 7,500. Okay. And then I say minus 2,130, and then I'm getting 16,920. Very good on that. Are you following it, Smanga?
Yes, I'm following.
Okay, perfect. You always start with the opening balance and then you deal with your closing balance, then you are done. Okay. So these totals would be the same now. These two. We're going to have 19,000 here and then we're going to have 19,000. So sorry, why are we having a different one here? Why are we having a different one? I was supposed to have 16,920. Kinelo, or I didn't hear you.
16,550.
16,550.
No, the total. Pardon?
Oh, here I'm supposed to have what? 19,000, right?
I got 19,050.
Okay, wait. Oh, here we have 11,550. Sorry. Here we're supposed to have 11,550. Then it's gonna be 19,050. We're supposed to have 19,050 also here. So if I add these two, I'm going to get 19,050. Yes, that's correct. So you are correct. 16,920 will be the packing materials. Okay, let's carry on now. Let's go to number 2. Number 2, they're saying directors' fees of 11,250 are outstanding at the end of the financial year. So what do we do with this one? Smanga, on your side? If directors' fees are
My
outstanding.
phone is blurry. I can't see.
Yes?
I can't see the screen somehow. Okay, now it's fixed. Which one are we doing?
We're on number 2 now.
Okay, number 2, director's fees of 11,200 outstanding. Financial. I think this is part of their salary. Or is it part of that the paragraph we did in 4.2? I don't know.
No, that's separate. That's separate. Let's deal with it as part of the income statement. This is just pure director's fees. This is their salaries, something like that.
Mhm. Okay, so we need to edit in salaries and wages.
We need to edit. That's correct, but not really on salaries and wages because director's fees are on its own here. So we need to edit. Yes.
I didn't see the income statement.
No problem, no problem. So on a director's fees, I need to add how much? 11,250 because these ones are outstanding, which means they have not been paid. So this is an accrued expense. This is an accrued expense payable. So I'll say 420,000 plus 11,250. Where is that 420? So here I'll come here and say plus 11,250. Okay. Then how much are we getting as a total?
408,750.
408.
Yeah.
No, it can't be. It has to be 431.
420,000 plus. Oh, I said
11,000.
minus.
431,250.
Yeah.
Yes, that's correct. That's correct. Perfect. Now let's go to number 3. On our number 3, what they're saying, a debtor who owes 16,000 rand has been declared insolvent. Oh, sorry, no, on number 3. Okay. They're saying here, provide for outstanding interest on fixed deposit. Provide for the outstanding interest on fixed deposit. So what do we do with this one, Kinelwe? Interest on fixed deposit.
We go to calculate the interest.
Yes, we're going to calculate the interest. So how much will be our interest? We have fixed deposit here, Westwood Bank, right? 8% per annum. That's what we have. How much will be our interest for the year?
$19,800.
19,800, okay. But how much was recorded in our books?
We recorded 12,430.
Yes, so which means now we need to add more, right?
Yeah.
How much we need to add?
We need to add 7,270.
Exactly 7,270. So that's what we need to go and add on the interest income. We need to say plus 7,270, right?
Yeah.
And then the total we're getting 19,800.
Yeah.
Like this now. Am I correct by saying 19,800?
Yes.
Okay. Are you following this one, Smanga? Do you understand how we got this interest?
Yes.
Okay. If you guys, because I'm interchanging you, if you don't understand something maybe that was said by someone else, you must tell me, because I want both of you to talk. I want to understand from both of you if we're working together here. Okay, there was interest income. Now we're moving forward. Now we're going to number 4. What is number 4 saying? Can you see the screen on your side, Smanga?
Yes, I've heard.
Okay, a debtor who owes 16,000 rands has been declared insolvent. This is a debtor is owing us 16,000 rands, has been declared insolvent. His estate paid 40 cents in every rand, and this has been received and properly recorded, right? This 40 cents has been received and properly recorded. The remaining balance must be written off as irrecoverable. So how do we deal with these transactions, Manga?
We're first going to calculate how much was paid by the estate, which is 6,400, and
Okay. Yes.
yeah, and then we're going to subtract. The remaining amount is going to be written as bad debts.
So how much is that? That will be written off. How much will be written off?
9,600.
Exactly, 9,600. So which means now, what do we do with that 9,600? I need to go and add it to the 6,000, to the bad debts that we have on our income statement. I need to go and say plus 9,600. Am I right on this one? And then how much is the total I'm getting?
Yeah. 15,600.
Yes, that is going to be 15,600 rands. Very good. That is our bad debts, which means when they're saying we only received 40 cents, which means about 60 cents that we didn't receive. So in other words, we can just say 16,000 times 0.6. Then we're going to get the amount that we didn't receive, and then we go and add it on that other bad debt. Okay. Adjust number 5, adjust the provision for bad debt to 5% of the outstanding debtors. This is the transaction that we will always get after writing off an additional debt. We will always get a provision for bad debt. Adjust the provision for bad debt to 5% of the outstanding debtors. How are we dealing with this one, Kinelwe?
We're going to go check the debtors control accounts in the trial balance.
Yes. How much we have there? $198,000, yeah?
Yeah. And you're going to multiply it by the percent. I can't remember what the percent was.
Okay, let's go down, multiply by 5%.
And then you're going to get 9,900, and then you're gonna compare it to the provision for bad debts you got before.
Okay, how much we have there? Is it 9,000?
You're going to subtract it from 9,900.
Yes, and we get 900.
Yeah.
So this 900 is an expense or income?
Okay.
It's going to be an income,
Yeah.
but it's increasing. It's increasing because this is 9,000, it goes up to 9.9.
Oh, yeah.
So which means it has to be an expense now.
Yeah.
Okay, but you see, Kinelo, what you forgot. I want to remind you of something you forgot. The reason why this transaction will always be after this one of a debt that has been just to be written off. Remember, we must always deduct, right? We must always deduct these bad debts first from debtors control, and before we multiply it by 5%, which is something that you didn't do. Let's go to the workings. We remember what we said there. We're going to start with our debtors control. How much was our debtors control? 198,000, yeah? Yes, so which means now our starting point is 198,000. And then from this 198,000, what do we do? I'm going to say minus first those additional bad debts that we wrote off from that 16,000. I need to said there, from that 16,000, we had to, there's a debtor who owes 16,000, has been declared insolvent. His estate paid 40 cents, which means there's this 60 cents of this 16 that was written off, the additional amount. We did calculate it. So we said, how much was that?
It was 9,600.
Exactly, 9,600. So which means this is the additional bad debts written off that we need to subtract here first, right? Before we say multiply by, how much we're getting after subtracting?
188,200.
Yes, 188,400, and then we say multiply by 5%, né? And then how much are we going to get?
9,410.
9,420, né?
10.
9,410, né?
Yeah.
410 or 420?
410.
I'm getting 420.
Okay, let me check my stuff.
I'm getting 420. Is it 0.05 or 0. Is it 10% or 5%? It's 5. So if we say 188,400 multiplied by 5%, it's 420, né?
Yeah.
Okay, thank you. So it's 9,420. And then how much do we have there as the provision for bad debt adjustment at the beginning of the day? It was 9,000. You can see it is increasing still, né? But only by 420. So which means now I'm going to say 9,000 minus 9,000 minus 420. No, sorry, 9,000 minus 9,420. Okay, let me just say 9,420 first minus 9,000. So I'm going to say it's equal to 420. This 420 will be a provision for bad debts adjustment as what? As an expense, right?
Yeah.
That is going to be an expense. Provision for bad debts adjustment as an expense. So which one am I going to remove here? Do we have telephone? We don't have insurance this time, so I can put it here. Okay, we don't have rent expense. I'll just put it here. Provision for bad debts adjustment. Then I'm going to have how much here? I'm going to have 420. Do you understand, Smanga? Why is this an expense?
Yes, I understand.
Okay. When we have to increase the provision for bad debts adjustment, remember a provision, I just want to clarify a few things here just to give you guys a bit of an explanation. Provision for bad debt, that's when we're saying out of the debtors that we have, because remember, 198,000 people with debtors are owing us an amount of 198,000. I don't know how many debtors are here, but in total, they're owing us 198,000. From these 198,000, we must always, we cannot fool ourselves and say we're going to receive the full amount here. We can't do that. So the amount that I'm willing to lose from this amount, initially it was 9,000. That's the amount I was willing to lose at the beginning of the year. But now when I do the calculation, they're saying I must increase it by 420. So which means now I'm increasing the loss that I'm expecting from this 198,000. That's why I'm saying this is an expense, because it is actually, it's not that I have already lost the amount. No, I haven't lost it, but I'm expecting to lose this amount, because there will always be those people who will be struggling to pay, or maybe they will just not feel like paying. Then I'll lose that money, those customers. So there will always be difficult customers in each and every business. There are those customers that will just, they won't want to pay. So I don't have. Hello guys, I'm sorry man, I think my network is giving me a problem. Weather is not good this side. Can you hear me on your side?
Yes.
Yeah,
Okay.
no,
I'm sorry about that. I think my network is also giving me some issues today. Okay, so we're doing number 6 now. We're dealing with a tenant. So here they're saying a tenant has paid the rent until 31 July 2014. The rent was increased by 660 with effect from 1 April 2014. So what is happening here? This is a rent income, because they're saying a tenant has paid, so which means now we're having a rent income. Initially we recorded 88,440, but from this amount we know that there is a tenant here that has paid rent until 31 July 2014. The rent was increased by 660 with effect from April 2014. When is our year ending? Our year is ending 30 June, but they paid with an extra 1 month, 31 July. How do we deal with this transaction, Ms. Manga?
okay, to be honest, this is one of the hardest transactions I've ever faced, and I've always gotten it wrong, so I don't know what happens here.
No problem, no problem. Kinelwe, how do we deal with this one? Let's see how we work on it. You're here to learn, so don't stress. If you don't know something,
Okay.
that's why you're here. Ne? Let's deal with it, Kinelwe.
So you times 600 by
From 1
by 4.
April, ne? By 4, ne?
Yeah.
Okay. So let me just say 2 here in the workings number 2. So you're saying to me, I need to say 660 times 4, right?
Yeah, and then you subtract that amount.
Okay, how much are we getting? 60 times 4, how much are we getting?
2,640.
How much?
2,640.
2,640. Okay, so we're getting 2,640. And then after that, what do we do?
You're going to subtract it from the rent income from the balance, trial balance.
Yes, how much is it? We said it was 8,440, ne?
Yeah.
So which means now, yes, you can carry on.
Now it's 85,800. And then
Okay,
you
I'm saying, okay, wait, don't rush, ne? I'm saying 88,440 minus 2,640, ne?
Yeah.
And then how, okay, what do I do after that?
And then you divide it by 13 months.
I'm dividing it by 13 months now. Okay, divide by 13. Yes.
So now you have the original amount, and you're going to add the increase, which was 660.
Okay, so I'm going to get an amount before increase here, which is how much?
6,600.
6,600, right? There was a rent before increase, this one, yeah?
Yeah.
Yes, very good. It's a rent before increase. Then now, how much I'm going to add from this?
660.
660, yes, because if you go there, they said the rent was increased by 660. So which means I'm going to say plus 660. So which means now I'm going to say 6,000 plus 660. 6,600 plus 660. And then how much are we getting here?
7,260.
It's going to be 7,260. 7,260. Okay. Then what do I do after that?
You're going to subtract it from
88
Yeah.
or 14, eh? So I'm
Yeah.
going to say here minus. This will be the rent. This 7,260 will be the rent for July, that extra amount, because they said here the tenant has paid rent until 31 July. Obviously, by 31 July, the rent has increased already. So which means this amount, it has to be a rent after an increase. That's why we're getting the amount of 7,260. That's the one we're going to subtract now. Very good on that. Very good on that. Can you see how we do the calculations, Manga? Oh, it's kind of confusing for now.
No, this is actually simpler than what we learn at school.
Okay, simple than what you learn. So you understand this one.
Yeah.
Thank you on that. You see what you here, the only thing that you need to ask yourself, how much was the rent before increase? How much was the rent after increase? Then you'll be able to get your answer. You see what Kinere did here? Firstly, she got the 660 times 4, which means she calculated to see how many months after increase. She started from April. So it's April, May, June, July. That's 4 months with an increase, and the increase is only 660. So if you take the 660 multiplied by 4, that is the only increase that we have. Then you subtract it from the total amount, which is 88,000 from the rent income. Where is it? From this rent income, which is 88,400. If I subtract the increase only, I'll get the total before increase. Then I divide it by 13 months. Then by doing that, I'm getting the rent per month before increase, which is this 6,600. Then 6,600 is the rent per month before increase. Then I add the 660, of which they told me about here, which is the only increase. Then after that, I'll get the total amount after increase for 1 month, which is 6,600. Then I add 660. No, 6,600 before increase. Then I add 660. Then I'm getting the 7,260, which is the rent per month after increase. That's the one I'm subtracting here because the rent has been prepaid. We have been received in advance. That's 7,260. So, and then in total, we end up having 81,180. Are we following, guys? Are we still together? Are we still together? We'll close our session soon. We're almost there.
Yes.
We're almost there. We'll close our session soon. Let's go to number 7. Let's go to number 7. Number 7, they're saying a vehicle was sold for cash 45,000 rand on 28 February 2014. The fixed asset register revealed the following regarding this vehicle. What is the fixed asset register? This one is for you, Smanga. What is the fixed assets register?
It's a document that has like all the assets of the business.
Exactly, very good. A fixed asset register, that's a document where we record all the assets of the business, right? That document will give you an asset code, an asset number, asset name, will give you the date of purchase, will give you the useful life, will give you the original cost price, will give you a depreciation, will give you the accumulated depreciation, will give you the carrying value or the book value. So that is a fixed asset register. It gives you all the details about all the fixed assets that we have in our company, right? So here they're saying the fixed asset register revealed the following regarding this vehicle, the vehicle that we sold for cash for 45,000. The cost of the vehicle, how much was it? 117,500 rands. Accumulated depreciation on 1 July 2013, that is 52,875 rands. This transaction has not yet been recorded by the bookkeeper. So this is a disposal. This is an asset disposal. So which means now, when you dispose an asset, you must always expect a profit or a loss. Right? So let's work on it, guys. So the starting point here, what is our starting point here? Smanga. What do we need to do here?
You need to minus the accumulated depreciation from the cost of the vehicle.
Yes, and what are we going to get after that?
64,625.
Okay, so you're saying I must say 117,500 minus 52,875, ne?
Yeah.
Okay, can I just remove this? And I want to create a space here for, let me just say number 3. You're saying I must say 117,500 minus 52, ne? 117,500 minus 52,875, yeah? Okay, and then what do I do after that? What do I do after that?
Yeah, ne? Let's try now. I don't know.
You don't know. No, it's okay. It's okay. No problem. Kinelwe, let's work on it. You're here to learn. So guys, it's not like you will always know everything. If you don't know something, it's okay. But let's see how we do it, because that's why you're here. I will explain it myself, but I always want to ask you guys to start first. And if you're failing, it's okay. I'm here to guide you. But I don't want to feed you with something only. I also want you to participate in a class, ne? Okay, Kinelwe, how do we deal with this transaction?
Since it's on the cost price, aren't you just going to times the depreciation on the
Yes,
cost?
yes, we have to start by calculating a depreciation first of the asset disposed, right? There's something called asset disposal. Both of us, I know, but we know an asset disposal. There's something called an asset disposal. Asset disposal, you always have to do that account. Today, I want to teach you guys an asset disposal. But before you do an asset disposal, if you look here, we sold this vehicle when? We sold this vehicle on the 28th February 2014, right? 28th February 2014, that's when we sold the vehicle. But they gave you the accumulated depreciation when? On 1 July 2013, which means there is a depreciation that you need to calculate here, because this is an accumulated depreciation at the beginning of the year. We have to calculate the depreciation up until 28th February 2014, and then from there, then we are going to get the carrying value of the asset. Then after that, we will know whether we sold it for at a profit or at a loss. So our starting point here, we need to calculate the depreciation, right? For what? For sold
Yes.
vehicle. Am I right on this?
Yeah.
For a vehicle sold. Okay, so how do I calculate that depreciation then? They said here, provide for depreciation as follows on vehicles at 15% per annum on the cost price on equipment and 10% per annum on the diminishing balance method. You remember what I told you before. Here they're saying diminishing balance method. Previously, what did they say? They said on carrying value. I said to you, they can say on carrying value, they can say on diminishing balance method, they can say on reducing value. You must know that that is a diminishing balance method. But because we're dealing with a vehicle that was sold, let's calculate the depreciation of the vehicle sold. How am I going to calculate that depreciation? This is for you, Kinelwe.
117,500 times 15%.
Multiply by 15%, right? Okay.
Yeah.
117,500 multiply by 15%, right? Okay, and then?
Can I check the transaction again?
Yes.
28. Then you're going to say 6 times 6 over 12.
Times 6. Is it 6 months?
5.
5.
Wait, do we count for? I'm not sure. Wait, let me do it again.
7. Is it not 7?
7. Where do we start? Where do we start? No, it's not 7 also.
On
It's not
July
7.
2013 all the way to the 28th of Feb.
Yes, how many months is that?
July, August, September, October, November, December, January, February. Oh, it's 8.
8 months, ne? Okay. So we're going to say multiply by 8 over 12. I was still there.
Yeah.
Okay. Yes, exactly. That's 8 over 12. And then?
And then
How much are we getting as our depreciation? Because that is a depreciation for a sold vehicle now. We are portioning it by 8 months. Yes?
11,750.
11,750, right? So which means that is the depreciation for the vehicle that is sold. Yeah. Okay. So now we need to get the carrying value of the vehicle sold. Now we got the depreciation, which means now if I say this accumulated by the new plus the new depreciation that I got, I'll get the accumulated depreciation at a date of disposal. Firstly, how much is the cost? I'll say cost price, that is 117, right? 117,500. Okay, then I say less. For me to get the accumulated depreciation, I need to say less accumulated depreciation. How much is my accumulated depreciation now? My accumulated depreciation will be, let's go to the question. At the beginning, the accumulated depreciation was 52,875. So I'll say 52,875 plus how much? I need to say plus 11,750. 11,750 because that is the depreciation up until the date of disposal. And then how much am I going to get as my total accumulated depreciation? How much are we getting? 52,875 plus 11,750. How much is it?
64,625.
64,625, right? 64,625. That is minus. That is minus. So how much is the carrying value of this asset at the date of disposal? That is 52,875. Can you see that? So I'll say here, carrying value at date of disposal. Carrying value at date of disposal. How much is it? 52,875. So which means now this vehicle worth 52,875 on that day when we dispose it, which is 28 February. How much we sold it for? How much you sold it for? Let's go and see. It was sold for 45,000. Can you see, guys? It was sold for 45,000 rands. It was sold for 45,000 rands. So which means now how much? Did we make a profit or a loss here? Did we make a profit or a loss?
Loss.
We made a loss, yes, of how much? Definitely we made a loss.
7,000.
Yes.
7,875.
7,875. Very good. Loss on sale. Yeah? That is loss on sale. So you can see, guys, we made a loss on sale. That has to go to the income statement. Whenever we're disposing an asset. But also, there is something called asset disposal account. That is something you guys did from grade 11. Asset disposal account. So I want to show you an asset disposal account on how we do it, because that's another way of solving problems here to make everything easy for you. Asset disposal accounts. Asset disposal account, that is an account that we open whenever we're selling an asset, right? That is an account that we open whenever we're selling an asset. That is called an asset disposal account. So we're going to have a debit and we're going to have a credit. Okay. We're going to have a debit and we're going to have a credit. The first thing that you need to record in your asset disposal, on your debit side, you need to record the cost of the asset that you are disposing. So here I'm going to say vehicle. I'm going to say here vehicle. Okay, let me just put a date first. When is that? When are we selling this vehicle? 28 Feb 2014. So I'm going to have what? 28 Feb 2014, right? 28 Feb 2014, that is the date. And then I'm going to say vehicle here. I'm going to say vehicle because I'm disposing a vehicle. For how much? How much is the cost? Here, I need to record the cost of the vehicle. The cost is 117,500. It will be easy now because we have already done the calculations. Then this side, we need to record what? An accumulated depreciation on this side. Still on the 28th Feb 2014, right? What do we need to record here? I need to say accumulated depreciation, right? This is the accumulated depreciation of the assets disposed at a date of disposal. That's why we calculated this. The accumulated depreciation is 64,625. 64,625. Okay. Then from this accumulated depreciation, what do we need to do now? You need to record the amount we sold it for. This was sold for cash 45,000 rands. So which means I'm going to receive 45,000 rand. When I'm receiving 45,000 rand, I'm debiting bank because bank is my asset. It increased on a debit side. So I'm going to debit bank and credit what? Asset disposal. So I need to say credit asset disposal here. No, sorry. I'm crediting asset disposal by bank and debiting bank by asset disposal. That is a double entry principle. I hope you guys still remember that. A double entry principle. You debit the account with the account you have credited with, and you credit the account with the account you have debited with. So here I'm debiting bank and I'm crediting asset disposal with bank. How much? 45,000 rands. Okay. Then I need to balance my account. Then I need to balance my account to see which side is bigger than the other and whether I will be having a loss or a profit. So if I add these two, I'm getting how much? 109,625. 109,625. Which means which side is bigger than the other? This is the bigger one. So here I'm going to have 117, and then here I'm going to have what? I'm going to have 117,500. And then the difference will be the loss on disposal, which is going to be how much? This total minus this and minus this. That is 7,875. Can you see another way of doing this thing? It's exactly the same thing that you did here. It's exactly the same thing that you did there, but you're also doing it as part of what? As part of your asset disposal account. You need to know this account as a grade 12 student. They will ask you this one in the exam. It's possible that they can ask you to do an asset disposal account in the exam. You guys need to know this one. For today, I think we need to stop here. Any questions, guys, for these asset disposal accounts before we close? Any question?
No, I'm good.
Okay. We'll finish the question tomorrow. We'll still carry on tomorrow. Thank you guys for your participation. You know, we work well when you guys participate. I can read your minds, I can see. So there will always be a progress when we're working together. So tomorrow we'll carry on and we'll finish this question, and then we'll be meeting from now until Friday, unless I tell you that we're not going to meet on this day. Then from next week we'll be meeting Monday, Wednesday, and Friday only, 3 days a week. But this week we're going to meet Monday to Friday, just for this week only. Unless I tell you otherwise, guys, to say I will not be available. So I'll see you tomorrow at 5 o'clock. Please, let's be on time. And I want us to push more this week, and then so that next week we start going